It's about 6:30 in the morning on Wall Street, about 3 hours before the open of trading. It's time to get your global macro on with Quant Box Live, where we uncover the best fundamental trading opportunities, looking at long-term macroeconomic data, then do comparative analysis amongst assets, identifying strong and weak trends, and then we look at shorter term, even very, 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 very short term market sentiment, medium term market sentiment, longer term market sentiment. And then we try to align these forces into a logical, intelligent trade. And if we can use all this data to track the underlying intrinsic trend, then not only can we perhaps pick the right direction for trading based on things like institutional positioning or central banking policy, well, then maybe we will have the confidence to let our winners run. It's $80 a month if you want to trade like a multi-billion-dollar hedge fund with a team of quants, or you can stay amateur. Whatever you choose. You can test drive it, YouTubers. Test drive it, I tell you. $8 to test drive it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I'm logging in here to remind myself that I am raising the price to $365 for the AI alert service. Check this out. I'm sure you have the email. Let's go here. Where is the email? Where did it go? I guess it's this one. Boop. All right, so this came out 38 minutes ago. So it comes out London lunch pre-market open in the United States, because you want to set yourself up properly for the market open in the United States of America. And what QuantBox has done is it's watched all the different assets, all the different currency pairs, and stock indices and commodities. Okay, cool. And the AI has recognized that there's been some important changes just very recently in the last few hours, because it also does this report pre-London. So this is just since the London Open. And okay, so you should be aware there's a change in direction there. Euro dollar is actually turning bearish. Yeah, well, remember, we've been below 109 for about 5 weeks, and now we're back around 108. So maybe we're getting to a point where there's a break below 108. And there's a suggestion here that might be happening. And we've been worried about NASDAQ. Oh, yeah, for sure. Stock indices, but NASDAQ is a big sort of leader. And what QuantBox has noticed overnight is that it's gone from a 4 to a 6. So there might be some hope for some up today. And if you want to know why these scores have changed, well, log into QuantBox. Pretty simple. So that's part of this alert service. The other thing that it does, and I don't know, do I even have an email open? I must have an email open somewhere. I don't know, do I? No, I don't have the right one. Let me just see if in another window do I have it. Oh yeah, probably here. The other thing that it does, and this is what it texts you. It'll send you a text message when it sees a fundamental alert. In this case, it'll tell you why. So this was 10 hours ago. You would have got a text message instantly. Okay, and it's time stamped here. Okay, and oil went from a 9 to 11 because retail sentiment improved and the technical trend strengthened. And that is sent to your phone so that you don't miss these major changes. That's a fundamental trade setup, which is interesting. So there you go. It's a pretty cool service. Now I've lost where you guys are. Now I've lost the. Where's there you are? All right, good. I'm back. You're back. You're back. All right, good. So now I can see you. All right. So anyway, so that's really cool. That's working. That's up and running. Oh my gosh, that took 5 months of development. Cool. So that's the price of that service is going up about 50% today. All right. So logging into the main dashboard here. Okay. We'll see. Have been going up. Okay. Yields have going up. Makes sense. We're pricing out rate cuts. Neil Kashkari says maybe we don't cut interest rates at all. And then who was it yesterday? One of the former FOMC members, Hawken. Anyway, somebody said that 3 would be the base case, and you should take the Fed at their word. Like, even if inflation doesn't come down tomorrow, if they think the neutral rate is extremely low and they're incredibly restrictive, they can cut. So he's like, don't double guess them. So I just listen to what they say. So it takes the guesswork out. I'm not good at guessing. Okay. Oil still catching a bid. Okay. Still, right. Still fairly high. But the question is, are we going to go to 100? Are you buying dips? Doesn't matter what the price is. It matters what you're going to do. Are you buying a dip or not? Right? Like, what are you doing? Is this going to 100 or not? I don't know. I'll tell you what the MACD says. No, come on. You make a decision, right? So, anyways, you can go into oil and get some seasonality and stuff like that. Like, why don't we just jump over there? Why don't we just do that? Let's go. Let's go. Get on with it. Okay. Are you a buyer of oil? Oh, look, the 20-year and the 5-year average says up. It says extremely bullish. You can't get a higher score in oil. And you're debating? Like, I don't know if it's going to go up, but like Quant Box is designed to take the debate out of your decision making process. Are you a buyer or not? Are you buying a dip or not? So you have your worst case, base case, best case scenario. Okay. Stuff like that. Retail is heavily long, institutional is heavily long, right? Seasonality says up. Retail sentiment should be changing. Okay. We'll see. We'll see here. So, boom. Well, what it's saying here is because retail sentiment is bullish, it doesn't like it. Just remember, our general strategy is trade against retail. Well, what are you going to do if everybody agrees? Well, maybe we get to a top later, or maybe just it's so obvious, right? Okay. Boris says, yeah, we're at a monthly take profit zone. Well, what I said is, are you going to buy a dip? We only buy dips. Remember, bulls only buy at support. So if we're at resistance, well, that's not support, right? But you're right. And a lot of these assets that we're looking at too are at like even annual highs. The annual, like gold, the annual projected high, right? So if you had asked me on January 1st, hey, Wayne, if I was a bull on gold, notice the question, the way I frame it. Not, Wayne, what do you think of gold? Well, you ask Chat GPT. Well, it is an element on the periodic table, right? It was formed inside of an exploding star. You're like, what do you think of gold? Isn't a question. But hey, Wayne, if you were bullish on gold, what would your annual target be? And I would have told you the price that we're at now. It's only mathematical models that give you a very specific price, right? So that's why we use these tools, which is really nice. So yeah, so there is definitely caution there, Boris, right? And in particular, and I was talking about this at Investor Bootcamp yesterday, where if you combine COT with technical analysis and some seasonality, you really have a trifecta of very powerful predictive information. Meaning, if the market is incredibly bullish, but you're at annual pivot point highs, and COT is incredibly to one direction, and it doesn't predict that it'll happen, but when the market starts to capitulate and say it's too high, it could be, let's say a long-term down. Like the market has just really gone too high. And then you'll start to see COT, which is institutional investors bailing on those trades. And we call that smart money. So when the smart money says, yeah, that's good enough, give me my profit, it could be a very big turning point. The COT data, big turning point. I'm a co-author on a book by Wiley Publishing that has another co-author, Larry Williams, and he's a COT guy. Like if you were learning how to trade anything, futures really, 30 years ago, because remember there was no retail forex trading 30 years ago, so you were trading some sort of futures, and that's all he really looked for. Very slow fundamental analysis, but he would look for the extreme highs and extreme lows in the market, and then use his charts looking for turning points. Well, we call that seasonality now, but we can plot that seasonally, which is an average of the turning point. But then you can actually look at the COT data on this stuff and like, well, what would you do if we were at the annual pivot points of oil and then the COT data starts going from a 3 to a 2 to a 1 to a 0? That could say long-term high has been printed. And if your charts are now showing lower highs and lower lows, you're short and you're heavily short. Long-term short. Okay, not hedging short, short, right? Too short. So, anyways, yeah. So it's kind of interesting here where you're like 70% of retail traders are long, and we're like, yeah, we don't like that. Just to point that out, but everything else is up. But I've been screaming bloody murder about this for what 7 weeks. So anyway, so now it's happening. Great. But you shouldn't be debating. All right, let's get back. Let's get back. I just want to show you like stuff like that where you're like, "Ooh, should I be buying a dip?" And then this is how you're using it fundamentally. And then you get all set up, and then you go to your charts, like Boris says, and you're like, "Hey, well, we got some resistance above us." Well, that's what technical analysis is doing. Quant Box is fundamental analysis, right? So then you go into your technicals, and you're like, "Ooh, this is a good profit taking zone. So maybe I'll buy a dip later." Today, maybe I'll buy a dip later this week. And then you use your technical analysis to start identifying levels of support. Maybe you're like next week's swing trade. Maybe it's the next month's swing trade. Like your job now is to not figure out what you want to do. Your job is to find at what level of support are you interested in buying. Because like when I go to like the price forecast, and this is the same thing that's on the oil chart, but now I'll bring up oil. Okay, this is not technical analysis. This is statistical analysis. Okay, this could be a data set of anything. Like you have an orange cat and a black cat, and they have babies, and you start plotting the difference in colors in their litters. Right? And you're trying to like on average, what color combination are these kittens going to be? Well, you can do it statistically. Okay, this is just statistical analysis, and then you go to the next level and do some more technical analysis. You might like patterns a little bit more. You like maybe you like predictive tools like pivot points a little more. Okay. And so anyway, but this is great. And by the way, if you ever have an opportunity to go back to university, I don't care how old you were. I went back to university at 45 or 46. Okay. I got 2 degrees. You can do it. Um, take a college level statistics class because when I was 20, it wasn't very exciting. Or if you did it in high school when you were 15, it wasn't very exciting. When you do it now, you're like, "Oh my god, this is all technical analysis. This is trading." And it becomes very, very, very exciting. You're like, "This is trading. This is trading. This is trading." So anyways, that's how I geeked out. And so this looks like technical analysis, but think about it this way, statistically speaking, this is bullish. I did a CIA meeting yesterday, and one of the things we talked about in that group is, do you have a process in which 100% that you are bullish or bearish? And I'm like, yeah. No one else wanted to answer the question. I'm like, yeah, I know precisely. I don't debate. If we're riding this 21, I'm bullish. This is bullish. There's nothing to talk about. Statistically speaking, this is bullish. It has a positive integer on the slope of the average mean. There's no way I'm bearish. Okay. And so that statistically, this is cool. It looks like technical analysis. It really isn't. But the trend is bullish. There's no debate. The rise over the run, it has a positive integer. Left to right. Okay. Bottom left to up top right means you're a bull. And that's that. And then the cool thing too is Quant Box is doing linear projections. Now, this is a regression study and there's strengths to it and there's weaknesses to it. Whatever, I just accept it. What it's doing is based on the slope of the mean is then projecting. So you can see it's doing a lot of the heavy lifting for you analytically. It's saying, hey, this is probably going to go up to 88, 88. It might go a little higher. It might not go as high, but right now, because it's pointing up, it's also looking at the positive integer, and it's like, hey man, this is bullish statistically, not fundamentally, but statistically. Cool. So you're a bull. I know 100%. Now, if it was projecting down, I'm a bear, 100%. No debate. Now, the thing is, you can use the fundamentals like seasonality and then COT and say, I think we could be at a top. Everybody's long on this sucker. Everybody's long. Okay. The ballerina standing on her tippy toes with a bowling ball above her head and her legs and arms are shaking, right? This could come down. Cool. Well, you could use this to identify when. Okay. And this is a daily chart, so it doesn't give signals 5 times a day, right? It's either bullish or bearish. That's that. So I want to show you how you can look at, you see that process you're at the when you're at the dashboard, you're like, ooh, I want to trade oil. And then you can drop into the oil page. Yep, confirm everything. Everybody's long. Everything, seasonality looks great. This is the right time of year to be long. Great, 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 great. Then you can do this if you know. Now this is on that chart to save you time, but I like the big version as well, right? But we have it here, and you say, okay, cool, cool. Yeah, today I do want to buy a dip, or this week I do want to buy a dip. It's all fundamentals. You haven't even looked at a chart yet. And if you've taken the 2-hour presentation I gave when I launched Quant Box, this essentially, not this beautiful, but this is essentially how I taught myself how to trade. When I opened up a chart, I already knew what I intended to do. I don't look to the chart for answers. I looked for the chart to say, what price and what time am I going to buy this? Boy, I'm telling you, it's a massively different mental process that brings another level of confidence which since I'm taught, I taught myself this way. I honestly believe that's the way you should trade, right? Versus opening a bunch of charts. Like seriously, if you open 100 charts and you just start burning through pound yen on multiple time frames and pound dollar multiple time frames, pound Swiss, eventually you're going to find something, right? And I know this to be true because I've been doing live webinars since YouTube was created, right? And people log in and ask me like, "What do you think of Aussie CAD?" And I'm like, "That's like the dumbest thing I've ever seen. Why the heck would you be trading that?" "Oh, well, I saw, a three pregnant nun pattern." I'm like, "Well, oh, well, good luck with that. It doesn't make any sense, but have fun. You're going to find something, even if it's the dumbest thing ever, right? It's like shopping while you're hungry. You're like, I'm really hungry. I think I'm going to eat this jar of pickled jalapenos. Uh huh. See you in 2 hours. So, anyways, let's get back to the news. Let's get back. Okay, let's get back. Let's go back. Go back here. All right. So, pity coming down. Okay, everything is hanging in there. Really, I really hope 4.5 is the top of the yield, which is the bottom of the market. But when you look at the price chart, remember with the yield, we're tracking yield, not okay. With the 10-year, we're tracking yield, not price. But when you look at the price chart, we had a situation in the past where the price chart was coming down and then it bottomed, and I bought it here. Okay. And then it rose. And when it rises, yield is coming down. And then it's coming down now, which means the yield is rising. But we're about 50%, maybe 618, but it's still, price is still higher than when I bought it. Now, prices come down a lot, but it's still a profitable trade. Okay. Now I have an options overlay on that, and I'm basically break even. So because I don't actually own this, and in fact, I own the 20-year. Okay. Right. So anyway, so maybe I don't want this to go above 4.5, but what I want is irrelevant. It's just what I'm watching, I guess is what I'm saying. Okay, taking a look at our risk gauges, and we went mixed again. We're trying to figure out what to do, and we lost our direction on the longer term. Don't worry, it can tick back pretty quickly. Why did it go mixed? Well, generally nothing happened yesterday. Did you know yesterday's stock trading session was the thinnest trading day since Christmas? Hmm? Pretty amazing, huh? So nothing happened. So if it's a risk off day today, this is going to go back risk off. This is going to go more risk off. So today, at the end of the day, we might have risk off, risk off, risk off. And maybe it has to do with the calendar. So skip ahead a little bit. Okay. New Zealand interest rates tonight. So maybe you're trading Kiwi today. Are you going to front run? What are they going to do? Do you know? How would you know such a thing? Oh, we have it plotted. I know I'm jumping around today, but I'm trying to show you not just that we have the information, but how you should be thinking. Okay. All right. So you can say, okay, here's the interest rate forecast. At some point, the central bank says they want to cut. Even more important, because this can change, is the reality of inflation. So one of the things you could do, you could either just Google it, chat GPT it, or look, maybe I need to add to this a little bit. But you should we on Quant Box, we have the actual inflation level. Maybe I'll have the developers add it here where you can compare actual with projected. But nonetheless, you want to find out where we are now, Q2 of 2024. Okay. And they projected or have projected that we'd be at 3.8 level inflation. So if they're going to cut interest rates, their actual right now inflation would be lower than that. If they're going to increase interest rates, it would have to be significantly higher than that. And if they're going to be neutral, they're going to be somewhere around there. Okay. And right now, what we've projected, Quant Box has projected that they're going to be on hold. But this summer might be a cut. Now, the Fed typically doesn't cut in the middle of summer. They'll cut. They need to cut before summer, okay, and then pause and then cut again. I've already projected all this in my annual outlook. But why would they do it in New Zealand and not in the United States? Well, it's not summer for them. It's the middle of the work year. It's winter. People are working, right? So, yeah, maybe a cut is coming. So we could look and see, if you listen to their or if you read their statements and stuff, we might see you're asking, will they cut in the future? Now, maybe they cut now. So that's where you have to see, well, where's their inflation level? I'm not used to this tool yet, but maybe we can find a way to get used to it by asking it questions. And remember, 3.8 is the inflation level that we're talking about. So let's go to the inflation tool and let's see if we can get used to it. New Zealand dollar, or I guess New Zealand anything. Okay. Okay. Don't look at all the scores and stuff. Just we'll look at it. Okay. The previous CPI in New Zealand, okay, was 5.6. And the current is 4.7. Did we say 3.8 was the number? You'd have to have inflation in New Zealand below 3.8 for the Fed for the Reserve Bank of New Zealand to cut? Yeah, 3.8. We're going in the right direction, but it's not good, is it? So they're not going to cut. You see that thought process? We went from calendar to central bank to pulling up the actual inflation data. Okay, so you have this coming this way. I wanted to, with these dots, by the way, this to show this data to you, there's about 5 layers of stuff. This is to make that actually look the way it looks. There's about 5 layers of different things, and they're all using different tables. So, like, to get the direction with the green and the red, and then to get the colors of the dots, and then to move, and it's really funny, and it's all connected to different tables and databases, and so you're like, oh, that's kind of cool. It's very complex, actually, too complex in my humble opinion, but that's how they built it. And so now we can do a comparative analysis of inflation in New Zealand versus the United States, and we're asking the same question of both central banks. Should they cut interest rates? Okay. Now, New Zealand reports at a different time frame their inflation, but nonetheless, inflation is lower, right, in the United States than it is in New Zealand. So, less likely for New Zealand to cut, more likely for the Fed to cut. All right, let's get back. We did the, let's look at the scatter plot. Bitcoin heavily down, even though it still has a bullish score. What does this mean? If you are personally bullish on Bitcoin, this is a dip. And bulls buy dips. Bulls buy dips at support. Where's the support? Yes, that's the question you should be asking. Now, in the process of quantitative analysis, okay, Quant Box gives Bitcoin a score of 5. Quant Box is bullish. Oh, but it's down almost 2%. Is that a dip? Well, once again, that's your job. Is it a dip or a reversal? That's your job. Okay. And you make that decision. So, once again, you can go to your chart or you can use this just to quickly burn through some of these assets. What I would do is I'd create a list of a few assets I want to consider buying today, or a few assets, excuse me, that I might consider selling today. And then you can toggle through some of these and just do, get a sense of the trend. So there's an uptrend, it's flattening out. Notice, like, for example, what I mean by flattening out. The way I visually look at this is I visually think this. And now QuantBox, using the statistical analysis, is going further back. And so it's going, all right, well, if you add this and this drop and then add it to that, it averages out this way. Okay. So you have to decide how far back do you want to go. Well, a trader, remember, that's only statistical analysis of a data set. A trader would probably say, well, you want to go from the bottom to the top and maybe do like a little Fibonacci. Well, that's what you should be doing on your chart. And then you might look further back than this and try to identify old resistance becoming support. Okay. That kind of stuff. And you say, well, yeah, maybe around this price, which is worst case scenario. Okay. This is base case scenario here. We're somewhere around 72. The other one's more like 71. Should you buy a dip? Well, once again, if you're on your trading platform, you can get much more precise data. These are just daily, right, prices. So you could say, and projected daily prices, maybe around 71, you get like this on an hourly chart. Yeah, you're long and gone. Why? Quantitatively, this has a score of 5, but price is down. That's your opportunity. Bulls buy dips. Now, it's hard to find these dips when you're burning through charts, right? Yeah. So you look at this, boom. Okay, right there. Now it takes 2 seconds. Okay, these things all have scores of 5 and they're all down. Quantitatively, they have positive scores, which means they should be up. Quantitatively, we don't know the future, and there might be rationale and reason for these to be coming down. Maybe Bitcoin just peaked out and it's going to drop to 50,000. Well, we don't know that. It's only showing you comparative analysis of macroeconomic data. So right now, these things should be going up and they're down. So maybe they're buys. Things over here are going up, but maybe they should be going down. You should go take a look at these things. That's how I look at it. So maybe gold is just very barely bearish, no big deal. So you're looking at the extremes here, okay? And you should be doing this every day. Anything up in this corner and everything down in this corner are the things most out of position. Bearish things are very, bearish things have gone up a lot today, or bullish things have come down a lot today. Now. So those are either reversing or they're the dip that you've been looking for. And so now you go to your chart and you try to decide using technical analysis what you think you should do. But at least now you know what to look at. And it used to take me hours to figure stuff out like this. Now it takes seconds. Cool. So you could look at the Japanese stock market, you could look at Bitcoin, or you're like, I don't really trade those. All right, so you can get rid of crypto, you can get rid of the stock indices. Okay. Gold is up today, but it's basically neutral on Quant Box. Okay. Very, 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 very bullish score on Quant Box. It says 9, but it's only because this doesn't go to 10. I'll have to see if I can adjust it. We've just added more things in the score. I don't know if you've noticed that. Since I've launched Quant Box, we've added more and more detail to its analysis. So I think it used to have a maximum score of 5, and we've added more and more things, and now it can go up to 10. And so I don't even have this plotted that far out. It's been getting better and better and better in its analysis. So it's working hard for you in many ways. So, anyways, this is only slightly up today, but it's very, very bullish. Okay. Very, very bullish. Very, very bullish. Very, very bullish. Very, very bullish. But they've moved less than 0.5%. Some of them are at 0, but they're extremely bullish. Okay. Pound Aussie is extremely bearish, but it hasn't done anything yet. So you could venture out and say, I wonder what the chart looks like. Maybe it'll set up on the market open. Trading at market opens are very important. You want to trade when there's volume and volatility, not after it's moved. So you're like, I wonder if pound Aussie is going to move on the New York Open. Well, today we have New Zealand news, as I pointed out. So look, pound Kiwi hasn't moved. I wonder if it'll move later today. You don't want to trade it after it's moved. So you're like, I wonder. Okay. Aussie Kiwi, Kiwi Swissy. Okay. Kiwi CAD. So you start going through them. Okay. So oil, very bullish. Kiwi CAD, dollar CAD, Aussie CAD. What's the theme? Bearish on CAD. So I used to create a table like this, similar but different. I show it in that presentation where I showed my original trading strategy in detail. I recreated the spreadsheet I used to do every day. But I would get data. So let's just say all this data. It doesn't matter how you get the data or what the data is. You're making analysis. And if we were doing this type of analysis, what I would do is then I would index all of this. That's all I was doing, really, is creating an index. So I'd take all this data, plot it all out, okay, strength and weakness. And what you're trying to determine here is that you're not really bullish on Kiwi, or you might not actually be bullish on dollar. You don't know. That's the thing, you don't know. You might not actually be bullish on Aussie. You might not actually be bullish. This is a 4, so it's neutral, but it's a 4. You're almost bullish, right? But on pound, you might actually just be heavily bearish CAD, heavily bearish CAD, heavily bearish CAD, heavily bearish CAD. So you wake up in the morning and you find technical reasons on your charts to sell CAD or not sell CAD. Okay. You'll look on the flip side. Here's the bottom of the market. Oops, not there. Okay. Okay. Pound Aussie, bearish. CAD, right? CAD Swissy, a -4. Ooh, a negative CAD again. CAD yen, a -2, which is funny because yen is weak. It's just CAD is weaker. So you're like, huh, there's some weakness in the CAD. That always hurts my heart, by the way. I always feel so bad for the CAD for some reason. Come on, Canada, right? Um, so yeah, but okay, so what about pound? Are we incredibly bearish on pound or are we bullish on Aussie? Well, pound Aussie down, pound Kiwi down, pound dollar down, pound yen down, pound Swissy down, and we're negative on yen and negative on Swissy, but it's even worse. Now, it's not really down. In fact, this is actually a score of 0. So, but the thing is, we're heavily bearish on Swiss franc. Why? They're the first major central bank to cut interest rates. And the pound is, like that weakens the currency by design. And Great Britain, the Great British pound, is so weak, it's equivalent to a central bank purposely weakening its currency. You're like, wowzer. So, anyway, so look, are you bullish Aussie? Maybe. Are you bullish Aussie? Maybe. You see a lot of Aussies. You can go back to the top here. Are there any Aussies? Well, just against CAD. Otherwise, I don't see a lot of things actually bullish. So now you would go to your charts and say, should you be trading pound today? Should you be trading CAD today? Okay, well, let's get rid of commodities. Let's start with the major. Well, we'll do miners. So you want to sell pound or you want to sell CAD, right? Oh, look, they all are over here and they all have negative scores. So Quant Box is already doing all this for you. This is how it gets its scores in the scatter plot. Oh, do you want to sell CAD? No, this is selling CAD. This is selling CAD. This is selling CAD because they're going up, right? Sell CAD to buy Aussie. Sell CAD to buy pound. We don't even like the pound. Okay, sell CAD to buy euro. Okay, this says coming down, so sell CAD to buy Swiss franc. Sell pound to buy Aussie. Sell pound to buy Kiwi. Sell CAD to buy yen. It's bullish today, but it's got a negative score. You see, so the scatter plot does all of this for you. You get all this information, analyzing this entire thing, analyzing all of this, and it takes you 2 seconds. I want you to understand the power of that because to create this card, you got to look at the COT data, retail sentiment, seasonality, trend, GDP, inflation, jobs, interest rate differentials, create a score, and then do comparative analysis of CAD versus Kiwi versus CAD, dollar versus CAD, right? Aussie versus CAD. I mean, it's doing all of this comparative analysis, and you're like, yeah, boom. All right. Okay. Sell these things, maybe. Okay. Buy these things, maybe. Throw in the majors. Okay. Cool, right? Cool. So, anyway, so that was jumping around a lot today, but I wanted to show you the thought process of, oh, look at oil. And then you go through the process of go to, check seasonality, check retail, check institutional, right? Check the statistical trend analysis. and then go to your chart already knowing you're going to buy at support. You just don't. Now your technical analysis is going to identify two things. What price is support? Quant Box doesn't do that. It does fundamentals. So you open your chart and you say, well, I want to buy this and I only buy at support. So what price is support? And then the other thing that technical analysis tells you is what time do you actually buy it? So you want price to come down to support if you're a bull, and then you maybe drop into a smaller time frame and look for like a moving average crossover to the upside, or an oscillator crossover to the upside, or a little mini, 1, 2, 3 reversal pattern. That tells you now is the time. It hit support, it respected support, you're fundamentally quantitatively long. Okay. Or the other way is to look at the news calendar and say, ooh, interest rate decision in New Zealand today. I need to check out New Zealand. What would make them cut interest rates? What would make them raise interest rates? What would make them neutral? Oh, well, what is their inflation target? Where are we now inflation wise? Let's do a comparative analysis of that. Whoa, they're way above their target. They're way behind. Their monetary policy is not working yet. They're not anywhere near a scenario in which they should be able to cut. Now they can do anything they want, but you look at it and say, we're in the mid fours and they expect to be in the high threes. Like we're nowhere near their base case. So why would they suddenly become less restrictive? And you might say, well, the probability of that tonight is very low. And now you have this knowledge going into the event. Cool. That's how you use Quant Box. So have a wonderful morning. This was Quant Box Live. That just happened to you. So remember, watch the markets, watch your pound, watch your CAD. Maybe if you're a Bitcoin, maybe you're going to buy some Bitcoin. I don't know. And I will see you in about 40 minutes over at Forex.today on YouTube. Peace on earth. May the pips be with you. May your profits be above average. I hope you love Quant Box. And the second thing is, if you were not a founding member of the AI alert service, which now 100% works, even texting your phone when fundamental changes are occurring, it all works. You have hours to sign up at that original founder's price. It's almost cheating, but I am raising the price and I hope to do it today. And it's going to go up 40-50%. It's going to go from $200 to 365. So that's actually more, right? That's more than 50%. So you can sneak in, but the door is closing. It's almost like Indiana Jones sliding under the door right before it closes, right? Like, but thank you to the founding members of that service. It was very complicated, so I apologize. I didn't think it would take 5 months. Nobody thought it would take 4 or 5 months. 5 months, right? It took 5 months. It was supposed to take 5 weeks, not 5 months, but it worked. So thank you for your patience, and I hope you love it. So anyways, peace on earth. May the pips be with you. May your profits